25 basis points is where the interest rate has been lowered. Right. How did the tariffs play into this, and what are we looking at right now?
Yeah, the language, when you dig into the statement by Tiff Macklem, is full of everything. The year started off great, but then the tariffs hit up. So there's a whole range of uncertainty involved in the tariffs, and this is why the Bank of Canada lowered the rate again, a quarter point down to 2.75%. That's the 7th time in a row. And according to the statement, and Tiff Macklem saying that the year got off to a good start, that we saw the economy was strong, job numbers continued to be created. We saw inflation coming to the target around 2%, between the 1% and 3% guideline, and also the GDP continuing to chug along. So these were all good things. But then the worry of the tariffs hit up. We saw the tariff threat. We saw consumer confidence falling, according to this bank statement this morning. Business confidence went down as well. Businesses were afraid to invest because they didn't know whether they should invest in this country or south of the border. So here is Tiff Macklem in his own words as far as the contradiction and really between a rock and a hard place as far as making this decision going forward.
Monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. The focus of the Governing Council will be on assessing the timing and strength of both the downward pressure on inflation from a weaker economy and the upward pressure from higher costs. As always, the bank will be guided by our monetary policy framework and our commitment to maintain price stability over time.